and you could watch so many episodes of Netflix, right? So of whatever you're binge watching, we're here and we're dedicated to helping eager people who are determined to learn something new that will be a new skill that will serve you for life. And yes, we have clients. We just heard from someone who just shared that, hey, I'm doing something right. I want to understand how to do that thing right more often through a strategy or through steps or through things I may not, be super comfortable with right now. And that's what this is all about. So we are streaming. Let's see, I just want to make sure that we're there on Facebook. And Dan, what I'm going to do is share my screen for the little presentation that I have prepared here.
Sure thing.
Okay, and bless you.
Sorry, thought I muted myself there.
That was good. That was a quick mute on that. Okay, so on my screen, I'm going to do slideshow, play from the start. And this is something really fun. It's one thing to put on a trade that somebody else gives you. And as a new trader, that's how we flex our muscles, right? In our group that we meet with on Mondays, Dan and I share trade ideas. And our students, our people who are in our Money Mojo Mastermind have simulated accounts, and they place those trades, and then they get really excited, like Britt, who's with us. I think she closed her Zoom trade out for a profit of $8,000 of paper money. And then there comes a time when you say, you know what, I'm done with the paper money. I want to understand, if you give a man a fish, he'll eat dinner for the evening. If you show a man how to fish, he'll eat for life. So that's what we're all about. And I think one big fun part of this, Dan, is finding your own trades, right?
Yeah, absolutely. We learn by having someone hold your hand, right? And eventually you're doing it on your own.
Yeah, and then, just finding those trades, that's super, super exciting. Just finding those trades are super exciting. So finding profitable trades. In a nutshell, we talk about this really simply. This is what options are all about. The best strategy for a high return, low risk learning scenario when we look at options is just simply buying options, right? So we mean buying calls and buying puts. So if company, let's say, I don't know, I was just looking at Zoom, it was at 167 when I looked at it today. So Zoom is at 167, right? So if I think Zoom is going to go higher, I can buy a call and be bullish, right? If I believe that Zoom is going to go lower, I can buy a put and go bearish. So when I say buy a call or a put, we're talking about a contract. And if we're speaking about one contract, depending on various variables, and we'll talk about the Greeks, but we don't want that to confuse you, there's going to be a price for that contract. And you're going to determine whether this is a trade that you want to go into relative to several factors we'll take you through. Charting, we do something called the Fibonacci retracement. But if you decide to buy, when you buy options, you can only lose what you spend on the price. And that's why options are so much more exciting than stock. Because if I buy 100 shares of Zoom at $167, right? I just spent $16,700, right? I could get into a strike above the 167, buy a contract, buy 10 contracts, and be leveraging a whole lot less than what I've taken up in my account to buy those shares. And if the underlying asset moves in my favor, if Zoom goes up and I bought that call at a higher strike, I can easily earn triple digit returns. And the returns that we're seeing are, 15% in 2 weeks, 25% in 3 weeks on our trading accounts. So that's why options are super, super exciting. Anything you want to add to that, Dan?
No, just, I mean, that they're agreeing with you that there's a great way to leverage your buying power, number one, but also in a less scary way than many people may think. Right, we're going to go through this.
Yeah.
We're going to show you that, when done the right way, right? Turn that switch off in your mind a little bit. That options are scary, options are risky, because truly they are the lowest risk way, in my opinion, to play or interact with the markets.
Yeah, because we know what our max loss is before we hit that button. We know that already. As always, we want for you to know, this is our legal statement, that I am not a licensed financial advisor, nor are you, Dan. So we offer ideas. We want you to know there's risk in the financial markets. You should be aware of all the risk that's associated with trading and investing. And if you so wish, we advise that you seek advice from an independent financial advisor if you have any doubts. So we're teaching something that we do every day. Every single trade that we share with you are trades that we place in our own accounts. I bring this up every week. We are in a volatile market. What's happening today, right? We had a down day of the Dow yesterday by the tune of 450. We're down 515 today. So we're not out of the woods, and we probably won't be out of the woods in a while, but when there's movement, there's money. Where there's movement, there's money. So we don't need to buy low and sell high to make money, and especially in the world of options, we can get in and get out on directional plays, either bullish or bearish, or we can profit if we feel that something is going to be neutral. Yesterday, I put a trade on Dan, a GE trade, where I just bought an at the money call, right? Because of what the chart was telling me, and in my sentiment that GE is probably going to go sideways in the short term. So there are ways to make money in all markets, and that's why we love options. So just some things I wanted to point out in these times. One thing's for certain, a lot of people are working at home. And the tools for working at home are being stressed beyond belief. We're using Zoom right now. I've been using Zoom for 3 years. People are using Zoom for the first time. My husband, who's a trial attorney, they're using these tools for the court system. These lawyers have never done this before. So we've been looking at technology that's associated with current events, right? Remember when we took current events in grammar school, and current events was actual course? Current events is what plays a lot into what tips us off when we go searching for opportunities. So I just wanted to flash a screen of things we've been tracking, Dropbox, right? Dropbox. I use Dropbox for my hard drive. I don't have anything on my computer. Wow. Look at the move from March 12th to where we are today. Crazy. Just below 16, it's at 2176 today. So Dropbox supports work at home. Zoom, right? When we first started speaking about Zoom, when we started doing these calls back in March, Zoom was at $110 a share. We're at 167. But I think what's interesting, Dan, is the up downs that we see here. And we could be assassins. And when we see, like, I got into Zoom, I think it was right there in April, that day where it went down to like 130, I don't know, like 133 or something.
Yeah, they had that privacy concerns day.
Yeah, there was one day where there was a privacy concern. So news today is driving so much. And at the end of the day, I went bullish on Zoom. And in 1 week's time, I put $2,000 in my pocket, and all I was tying up in my account was $6,600 to make close to $2,000. So that's a 30% profit, right? In in a very short period of time. So how do we find these ideas? And one of the things that I wanted to introduce to people here is something that I've been looking at. It's a site called Market Chameleon. And Market Chameleon, and I'm going to take you there, where there's movement, there's money, right? So what I do is I look for unusual options volume. That's one of my fun screeners for the day. And then I sort the volume, and then I come across something. So we'll look at what I came across today, and then when you see the chart, your hair is going to go on fire. I'm not saying I'm sure I know what I want to do with this, but it's certainly unusual activity. So this is what we do. We take that stock, we go into Thinkorswim, we chart it, we throw our Fibonacci retracement on top of it, and then we go through our decision-making process, and we have our little checklist, right? Am I bullish, bearish, or neutral based on what this chart is telling me, based on what is going on in current events, based on what the news is, based on whether or not, earnings are coming up. Am I looking at the call side or the put side? If I'm neutral, I'm looking at both sides, right? So we do something called an iron condor. What expiration date, what contracts am I looking at? What strikes am I looking at? So Dan, anything you want to say about that before I bring up Market Chameleon?
Yeah, no, it's that we have a lot of tools and steps to evaluate, what expiry date should I use for this option? What strike should I use for this option? It's not just a black and white, like, oh, I'm going to go long, I'm going to go here. We do walk all of our students through exactly, this is why we're picking this strike. This is why we're picking this expiry, and so on and so forth.
Yes. I've been trying to go live on Facebook today. It's just not participating. It's just not working for me. I guess everybody's going live on Facebook. But we are recording that, which is cool. Okay, so I'm going to go right to the homepage of Market Chameleon. You see it, Dan?
I do.
Cool. So there is something under options. If I click options, and by the way, this is the free version. I'm not paying for this. So anybody who's on this call, you can try this. I go to options and I go to unusual option volume. Unusual option volume. And then it takes me down to stock description, option volume statistics, stock price, catalyst events. A catalyst event would be earnings reporting, right? So what I did, Dan, was I went to volume and I just clicked on it. I sorted by volume. And you could see, wow, GE, a lot of volume, on GE right now. Cisco, these are some new ones that came up, since I looked at this. So what does volume tell us, Dan?
That there's interest, there's activity.
Yeah, and there's liquidity. And we want to, if we're placing a directional trade, we want volume, right? We want volume, we want movement. So I came across Grubhub, right? Grubhub. They're the delivery system that's bringing everybody the food that they're eating. I go to the supermarket these days. What's the service? I forget the service of the shoppers, but everybody's, is hiring shoppers from that app. And it'll come to me.
Postmates?
Postmates or Instacart, right. So Grubhub, I found this to look interesting. I clicked on Grubhub here, and what comes up on this screen, I could look at trades. So I'm clicking on trades here on the left. Oh wait, that's not what I wanted. Option trade rather, option chain. So what we're seeing, Dan, here is there's more volume. There's sort of volume on both sides here with these strikes of 51, 55, and 60. Okay, I could look at different contracts. So I could look at, the June, that was the May 15th, these strikes. So what we're seeing is the 52-week high, 52-week low, average up, average down moves, and volume. So the volume, we could see where the volume is in the particular strikes. So then, Dan, what I did was I hopped over. So something's happening here with Grub. I haven't even looked at the news. I mean, this is something literally that.
Britt was saying that the news came out that Uber will potentially buy Grubhub.
Oh, there you go. So Uber will potentially buy Grubhub. So boy, I didn't even know that, but by going to this tool, I knew that something was up. So isn't that super cool?
Yeah, I mean, the evidence is always in the numbers, right? The
Evidence is in the
always
numbers. So what I'm going to do now is I'm going to go to my Thinkorswim, my paper account, and I'm going to share that. Let's see, resume share. And ooh, what am I sharing here? I want to stop that one. I want to go back to my Thinkorswim. So let's start share. I'm going to go there and boom. Boy, oh boy, oh boy. What do you see there? Wowza. Grubhub on, I guess, yesterday when the news hit, it was at 46, went as high as 65. Now we're at 56. So it blasted through that 78% Fibonacci retracement line. It's now below the 78% line, but barely below it. So this is the thing we do. We go to our group, and I'm not saying I'm going to give you guys an idea on this right now, but these are the ideas that we bring to each other. We have a WhatsApp group. We share specific trades we're looking at, and together we come up with strategies. And Dan, you probably have something that you're thinking about. You know, you're the guru, I'm the seeker here. Looking at Grubhub and what you see on this chart, what are a few things that come to mind for you?
Well, I mean, I like the thought process of, you know, it's moving, so let's trade it. A few things come to mind, be it I mean, it seems to be retracing to about the halfway point of its movement, right? So whenever you have a massive movement in a stock, you typically see a big move one way and then a retracement the other way, right? For about, it can go 50 or more %. So that, I think, is going to tell us if we come back down 50% and it starts to base, like plateau there, that's going to tell us that we're either going to blast back up, right, through the top of the move, or kind of fizzle down and trickle back out. So that is an opportunity for I think, a bi-directional trade. So something that maybe buying a put and a call, or buying a bear put spread and a bull call spread. So like almost the opposite of a condor.
Oh, okay.
Selling.
So
selling a condor, buying a condor even.
Cool. Yeah. So this is what we do. We look at the chart, and yeah, I could kind of see going down to looking at this chart like 52 or so in between that 50% and 78% line, because we after looking at charts, we get a sense of how price travels, and the Fibonacci retracement just blows my mind. I do see a point between the 0 and the 25 where it did exactly what you just described, sort of went down 50% and then blew through that line, right? So it has, that experience of doing it. So that's my piece today. I'm going to hand it over to you because, I always love doing my piece. It comes from the perspective of the option seeker. This is something that I'm doing for a short period of time. And I started learning with Dan 2 years ago. I worked with him one-on-one. We lead a group right now, but I love coming in on this because it's really the perspective of you all with us. I feel like my perspective is I'm reading that metaphorical book, which is called Options, and I may be a chapter or two ahead of you all here while Dan's on, book 3 of the series, but we bring it down to a level where it's super understandable for everyone. We're learning, and I'm so happy to see we got some more people here, some familiar people, and we got something really special for all of you too this Friday. So if you go to optionsforwealth.com, and I'll make sure that I'm going to write down everybody's name here. We're doing a free 3-hour options profitable options in 3 simple steps. We're going to go through call options, put options. We're going to go through gamma and theta, what moves option price and how contracts are priced. We're going to take you through the options chain so you understand that inside and out, and then volatility and orders. And this chart, we always come back to this, but optionsforwealth.com. We're going to make sure that everybody here, what else do you guys have to do? It's 12 Eastern to 3 Eastern this Friday, and it's going to be not a webinar, it's going to be a Zoom. So we're all going to be looking at each other, asking questions, learning together. I know Britt's going to be there. I know Ron's going to be there. I'm going to call Esther and make sure she's with us too, because it's going to be a blast, and many other people will be with us too. So Dan, go ahead.
We find that, the best, although it can come off as repetition, we really need to make sure that all of the students, all the people that are working with us, have a solid foundation in this chart, like in this page that we're looking at right now. And options can come off as being very complicated, right? People get confused with the Greeks and the options chains and where do I click and, so on and so forth. But it really boils down to these 4 moves. There's only 4 things you can do in options trading. You can buy calls or sell calls. You can buy puts or sell puts. So really,
and also, I want to stop here, Dan. I want to stop here. First of all, please put your microphone. I'm going to get you this microphone before Friday. But number 1, there are people.
I usually use these things, but for some reason, Zoom doesn't like these all the time. My AirPods.
Yeah, no, we're going to get you one of these guys.
I'll order that today after this class.
Yes, but we said that with love, but we have people here. Oh, I have to click that. I have my green screen. We have people here who who are hearing the word put and call for the first time. So simply, there is a price of when we say the underlying, we mean the stock or the ETF or the index, right? So there's a price that something is trading at right now. So we just went to Grubhub, right? And we said that Grubhub right now is at 5609, 5609. So that means the underlying is at 5609, right? So when we refer to calls and puts, they're strikes that are either above the underlying or below the underlying. The strikes that are above the underlying are calls.
But we can buy calls or puts at strikes either above or below the underlying.
Right.
We do typically buy calls above the underlying because we are directional on them. I mean, the nice thing that we can always think about the telephone. Remember the old telephone? Right? Pick up the phone to make a call. Put down the phone to hang up.
Up for call.
Down.
Put down.
Put down.
So call is up, put is down as it relates to the underlying.
So if I'm buying a call, and we're talking about buying, right? It's buying. Buying a call, I want price to go up. If I'm buying a put, I want price to go down. Simple enough? Now let's add.
If I'm buying a call, I'm bullish. If I'm buying a put, I'm bearish.
And long in this context means buy.
Yes, and that's the confusing thing too. In this chart and in options, long means buy, short means sell. Long does not mean bullish, short does not mean bearish in the language of options. So that, for me, when I was first learning this, that was confusing.
And this is the reason why we're going to spend 3 hours on this, right, on Friday, because it is confusing, right? Especially for somebody who's never learned it, never seen it before. But, we also have people like, Britt and like Ron on the call who have been with us for like a month and they're getting it. I could ask, like, fire it off right now, like, Britt, what is a bull put spread? Putting you on the spot, Britt. You there?
Maybe she's muted.
Maybe she's unmuted.
Hey, Britt, play with us. What's a bull put spread?
Bull put spread is you put me on the spot.
Oh yeah.
You could say pass.
I know what it looks like in a chart and
There
I know
you
what to
go.
do with it, but I don't know how to explain it.
Yeah, so there's two of these quadrants, right? So where a bull put spread is buying a put and selling a put. When we do spreads, we talk about two of these quadrants at one time. Okay, so a bull put spread would be selling a put. So Grubhub's at 59, so it would be selling a put at 55, buying a put back at 50. It gives you a net bullish position. You want price to go up, but your risk is limited and covered in the way that we like to see with spreads.
Yeah. So the reason why we do spreads, there are two reasons why we do spreads, okay? The first reason is when we're a net seller, right, for protection. And the second reason, if we're a net buyer, to reduce our price that we have to pay. And that's how spreads serve us.
Exactly. So, and we'd always talk about controlling our risk here, right?
Yes, we're never naked.
Exactly. And so being naked in the options world, is a good way to make a lot of money really quickly, and then simultaneously a good way to lose half your account very quickly. So we don't like that.
We
mentality.
never, ever, ever do that.
And so being naked refers to either selling a call or selling a put, selling a single leg of a call or a put. You'll see that. I'm going to go through these one at a time really quickly. But since I just brought up, selling a call, the issue is that your risk is unlimited in a position like this. In the example where you're selling a call, right, you're collecting the premium for the call up front. Right? So I can sell a call on Grubhub at 65, right, and I can collect $300 per call, say. But the fact is that I lose $100 for every point that we go past 65. So, in the example where Grubhub potentially may get acquired by Uber, and then, so say that actually comes to fruition and it goes through. Right? Sometimes it does, sometimes it doesn't, but say in this case it does go through. And then Grubhub jumps from 59 to like 90, like overnight. You take a hit between the point at which you sold that call and current price. So in this case, if we sold that call at 65, we would lose $100 for every point between 65 and 90 per contract, which you can see is massively more than what we would have made on that trade in the first place. So case in point as to why we would never enter into a position like that without buying some insurance a little bit further away. And we do that by selling a call and then buying a call a bit further away, thereby profiting from the distance between those two calls, but also limiting our risk. And so there's 4 quadrants here. I mean, I can go into, it's only 9:30. I can cover all 4 of them really quickly. If you think that would be valuable.
Yeah, I think, we take, and we'll do this on Friday. I think it's always wonderful to go through the options checklist, right? So we have our 10 points of the options checklist, really high level. We determine that, wow, there is something of interest that we're looking at. So are we bullish, bearish, or neutral? And then are we going to look at the call side or the put side? And based on contract prices and in strategy, we'll put together a trade. And that's basically it. So we're looking at a trade that you did, Ron, and are we looking at Microsoft right now?
Yeah, we can look at Microsoft. I was going to pull up a SPY and just build one right now.
Well, whatever you are inspired to do.
Yeah, so the SPY. So when I
So the
first started
SPY is the S&P 500, yes.
Yes, it is the S&P 500 ETF. And you don't see my screen here, I hope.
And the S&P 500 is down right now. The SPY, the S&P 500 ETF is down $5.50.
Yeah, so it's down, it's down substantially today. That's a big downward move for like the basket that is essentially the large cap index of the United States, the 600, the 500 biggest companies basically in the United States are collectively down about, I don't know what that is on a percent basis, but
Yeah.
2.1%. I mean, that's a big down day. Let's just pause and reflect on that for a second. Typical days, and you can see my chart here. I've got a whole bunch of drawings on it, but typical days in the last 3 years, it just kind of goes up and down a little bit, up and down a little bit. But then we get to, sorry, I have to move our beautiful faces here so I can see my drawing.
Okay. There you go. I see it. Okay. So you're remembering.
See it better?
Okay. Yeah.
So let's compare and contrast like the last year. Okay, this is the last year. So the size of these little marks here, these candles, for those of you who don't know and haven't traded a lot in the past, they represent how much the market moves, in this case, in a 1 day period. So each of these little candles is 1 day. Okay, see the size of them? And, they're relatively small, right? Each of these days we have maybe a 15-point move or something like that. And then came February 19th, really the beginning of this whole thing.
I remember that day.
The economy got simultaneously hit with massive oil price war and the beginnings of the coronavirus, which then escalated, among other geopolitical tensions and whatnot throughout the world. And the result in the market was that volatility expanded greatly. So the average movement in a day went like 5x or more. And again, we always go back to the fact that the picture tells a story, right? The picture tells a story of what we trade and what we do. And in this case, the story that the picture is telling, that there's a heck of a lot more movement every day now. And if you see the size of these candles now, they're way bigger on the right side here than on the left side, right?
Yeah.
So what that means for us, in the options world, is two things. One, there's a lot more opportunity in terms of making trades because, in general, we like movement, number one. Number two, if we are going to sell insurance vis-a-vis a spread, a bull put spread or a bear call spread, which we'll learn about, don't worry, but two of the fundamental moves that we will make, we can collect a lot more money for doing that than we could have 2 years ago.
Yeah, in fact, I'm looking at an article right now from MarketWatch talking about, what is caused the 500-point tumble today. Powell says that the economic path ahead is uncertain. And there's a quote here. Druckenmiller says that the risk reward of investing in stocks has never been worse. The risk reward of investing in options has never been better, right? So that's why you're all here with us learning this, because we're limiting our risk. There's no limit on the risk. And if you think a stop loss is a surefire way to limit your risk, we can tell you about, gap downs that blew people away who thought they had protection by stop loss.
Yeah, you can't trade at 2 a.m. when something happens to the CEO of a big company. Then the market opens up the next day and it's down substantially, or whatever. But a lot of what we'll do too, right, is we'll bring our students to class. We'll talk about something like this. We'll look at a chart like this and say, well, what do you want to do with it? So I'm looking at this chart of the SPY, and by the way, for those of you that are new to trading and new to options, I recommend starting with an ETF, something like the SPY, as I did 10 years ago. But looking at this, Dawn, I mean, I see a big pullback today, and a potential bounce off of this 50% retracement or 50% Fibonacci line. So to me, that's a good opportunity to put on some form of long play.
Mm-hmm. Where you're buying.
I can be buying calls, say.
Mm-hmm.
So, if we wanted to just do a very simple example where we're just going to buy some calls, right? We'll go out. We don't need to go out that far for a play like this.
So this is the options chain on Thinkorswim that you're seeing on the screen right now. And we go into platform with our students. Also, the beautiful people at TD Ameritrade will spend as much time as you need taking you through this platform because they want happy customers. They're wonderful. So this is, you don't need to trade on in a TD Ameritrade. You can use this as a tool, as Dan does. Although, I trade in this platform. It's my preferred broker platform.
So I think that, if I wanted to speculate that price was going to revert and bounce back up,
okay,
I might go to the June 19th, it's a little bit further away. And I think it's going to go back up to 290, say, for the purposes of this example.
Okay, so you're buying an out of the money call. Current price of the SPY is 281. Dan is looking at an out of the money. There's no intrinsic value in the position right now. And we'll be speaking about intrinsic and extrinsic value when we meet. So
and looking still, right? And so this is a good qualifier for what we're talking about too, right? We're going to look at we can look at all the trades we want. Free. We can look at them all. So if we're going to get to this screen and we have our direction picked out, we have our strikes picked out, our expiries picked out to an extent, but the price isn't there, the price that we want isn't there, we don't have to buy it.
Yeah, that looks pretty expensive to me.
Yeah,
that's a vertical for $4.83. Why don't you analyze that and just look at what the max profit is relative to the max loss?
We'll talk about why this maybe is not even a good trade.
Yeah,
right?
because
it seemed like intuitively it seems like a good trade because I think the market's going to go that way, but in this case, it's only a 1-to-1 profit potential. So I would need price to go to 295 in this case to realize my full profit potential, which would only reflect roughly a 1-to-1 return on that.
Yeah.
Whereas I can take other different trades that would look better than that.
Yeah, so we help our students understand, okay, what are the criteria I look at for, whether or not something is a trade that I want to take, right? So that's, and you'll just get used to this, like it's second nature. And this is play. Dan, I was listening to my spiritual teachings this morning, and one of the things that brings more abundance, brings more opportunity, brings more success to us is actually doing something that we're eager about, we're determined, that is fun. Sure. And in those moments in life where we found ourselves working in an environment that didn't feel that way, maybe you had success, but it wasn't sustainable success. So we're gathering a tribe of people who have always wanted to learn about this, but have never found those mentors who would break it down to a level that was digestible. And we're just playing together. We're having fun, and making money is fun, and understanding, like somebody said at the beginning of the call, wow, I'm making money in the market, but I want to understand how to do it on demand, right? So when these things start clicking, there's no better feeling of confidence and empowerment, and to know that the sky is the limit, and the current market situation does not dictate my ability to make money in the markets, right? Most people are collecting incentive checks and worrying about where their next dollar is going to come from. And it breaks my heart. You know, it's where we are in this country, but there are people who are on this call that are saying, I'm taking matters in my own hand. I am not going to be the victim of what's happening in this environment. I'm going to find the strategy so I can rise above the environment. So that's my little spiritual pitch here.
It gives you, I mean, it gives you the flexibility to create your own paycheck, right? I mean, you're not beholden to anywhere you don't want to be. I've done that. I've done the whole 60-hour corporate America thing, and it pays well, but the quality of life was terrible. Which is why I'm over here doing this now. I left Fidelity.
Right. And even people who are in business for themselves, if you have this coming in for you, you don't have to take that client who's a crazy client. If you're a real estate agent, refer that client, take the 25% and just work with people that inspire you, work with people that, energize you. This just gives you that freedom. So I want to make sure that I know we spoke a lot, and we have a group here. We're recording this, so we're going to share this on our Facebook page later and do a watch party because we can do a live. So for those of you who are watching us on watch party, please add into the comments. Because I'll be watching with you, Dan will be watching with you. Anyone here, because we have a small group, have a question or have something that you were looking at that you'd like us to put up on the screen, I'm going to allow everyone here to talk. So don't be shy. If you don't want to speak and you want to just go in the chat box, you can too. So anybody want us to bring up any stock or ETF or you have any question on anything that's in your portfolio, we'll break it down with you right now. Please do not be shy.
I wanted to make and yes, everyone, feel free to chime in. I'm just filling the air here.
You're
Go
doing,
ahead, Don.
well,
What were you going to say?
What I want to do before, I'm going to go back to your screen. I'm going to show, let me go back to the presentation because I want to break down what we're doing on Friday and make sure that everybody has the URL to go to so they can sign up and get, the Zoom room link for the session that we're doing on Friday. So I'm going to share that. Boom, 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 share screen.
Doing an options intensive. It's going to be a great foundation, taught at the level of someone who has maybe dabbled in options or not even traded options whatsoever. You should come out of this with at least a much better understanding of what we're doing.
Yeah.
So
and
also run with it and do it all yourself after 3 hours? No. But,
yeah, and what usually happens is people come to this and they learn about options, and we've helped either facilitate a decision of them wanting to learn more, and if so, we would love for you to join and learn with us. We make it, financially, so the hurdle, it's so low what our dues are on a monthly basis. And certainly if you need one-on-one, Dan does one-on-ones. Or you may say, wow, I can't imagine myself doing it, but knowing how this works is a good thing too. When I was selling real estate in New York City, I wish I understood this language because I would have spoken to, my Wall Street clients a lot more eloquently. I would have, had a more interesting rapport with them knowing the language of options. So I think it's a language that you should at least understand the high level of it. And if you're excited about writing your own paycheck and being consistent in earning, whether the market's up, down, or sideways, there's no other leverage asset class that allows you to do this, right? So on Friday, we're going to go into accelerated investing, how to identify your number on what you want your portfolio to grow at a minimum a year. and creating a trading and investing blueprint. So you're adding to your portfolio and you're holding to that rate of return, right? So just because we have a sideways year doesn't mean your portfolio will have a sideways year, because there are different ways to turn up the rate of return that Dan and I are going to show you. Anything you want to say about that, Dan?
No, I mean, you're absolutely right. I mean, the beauty of options, right, is you can place your trade on saying, I think the market is going to go here, or you can say, I think the market's not going to go here.
Yeah.
It's the only asset class where you can do that, right? Everything else is binary. You have to guess up or down. It's red or black.
Yeah.
That's it. That's
You
the
get
only
paid,
options, everything else.
right? You get paid on saying on where the market's not going to go. That there's a strategy for that. So options versus traditional trading and investing with stocks, as I said earlier, would have cost me $16,700 to purchase 100 shares of Zoom. And if I made $2,000, that's a very small rate of return on, you know, tying up so much money. I just tied up $6,600 and made $2,000 in less than a week. So we're going to show you what that's all about. Directional, going through the verticals with you. And that's the first way that many of our students start trading, going bullish or bearish through directional plays. We just went through an example with Grubhub today and the SPY, you know, the ETF on the S&P 500. Turning up your rate of return with covered calls. So many people are leaving money on the table because they're not selling calls against their underlying shares of stock that are already in their portfolio. So there are stocks like Coca-Cola, right? Others. We just did something on Snap last week where we saw a 13% return on Snap in a month through a covered call strategy. So it's eking out more percentage with just being in your portfolio as you are right now.
Yeah, make that portfolio work for you. Rent it out.
Yes,
Rent out that
rent
extra
it out.
room in your house without a
So
roommate.
in many of us, like my goal is to be making at least 12% plus a year on my portfolio. And I want to bring in an extra $8,000 to $10,000 a month trading options. And I'm not sitting in front of my computer. That's the beautiful thing about options too. You put on a trade and you could walk away because your downside is already covered. And, you know, for those of us who are a little bit more active, we're checking our portfolios maybe once a day and just assessing, okay, is it time for me to get out or do I stay with this? And you can also preset the point where you want to take your money off the table. We're going to talk to you about all of that. So optionsforwealth.com, optionsforwealth.com. Tell all your friends. You know, I have an amazing influencer who's on this call. I want every single real estate agent in New York to learn this so they don't have to feel so desperate or have to go from deal to deal or work with people that don't inspire them. Anybody who is in this world of work, there are restaurants that are going out of business, right? 30% of restaurants are going out of business. Many businesses are permanently laying off people, right? We're reading that in the news. So this is the plan B, right? This is the safety net. And then if there are people here who want to start working with us, just the way we work is we have a WhatsApp group. In the WhatsApp group, we shared trade ideas. I shared a few of them yesterday. We have a Monday roll up your sleeves learning session that Dan leads and I facilitate with him. Online portal with access to world-class training videos and training content. And then we have one-on-one mentoring also. So if I'm checking chat here, but I want to encourage people. Oh, thank you. Ron says, he's so sweet. Ron's like, I can't get on the mic right now, but I want to encourage people to come. The information you both share is so practical and helpful. Everyone should come. So and thank you, Ron.
Ron.
And that is so sweet. And yeah, we get you and we got you. Like we want for you all to, number one, have a relationship with options. It's the thinking man's and the thinking woman's leveraged asset class. You know, the people that we see align with this are intelligent people who, doctors, real estate professionals, lawyers, it's just, it's, if you want to put yourself in a room of sharp individuals who are heart-centered and supportive, you know, this options are the environment, and the table that Dan and I set is a very gentle, loving, and we're going to hold your hand until you get this, right? So that's all I have to say. And optionsforwealth.com is the URL. Make sure that you all, you know, get that so you could sign up for it. I know we have, you know, and it's probably going to be an intimate group. I'm saying maybe like 20 or so, maybe even less than that. And we can't do this enough. If you haven't noticed it already, I can't. My personality style is a little different than Dan, so I tend to, you know, get more exuberant. I think eat, drink, sleep options. I'm so passionate about options.
Dream options.
Do you dream options, Dan?
I'm
Instead
a
of counting sheep?
I'm a boring guy. I dream options.
Instead of counting sheep, what are you doing?
Rolling through these options chains in my head, trying to find that moment in the row.
Trying to find the perfect trade. So I've had so much fun with you all. Thank you so much for coming here with us. And we'll see you on Friday at 12 noon to 3 p.m. noon. And have a great rest of the day today.
Yeah. Thanks,
Bye
everyone.
now.